Thinking of starting a new business, avoid these four mistakes every new entrepreneur make. One is going ahead and treating a side hustle as an actual business. What that means is you make about 600 or less and you went ahead and register this business as a LLC or corporation. Now you are held liable for paying taxes or penalties or even filing annual reports, BI reports, and every single requirements deemed by the IRS or the state in the revenue department. That's not profitable for you, because if you make less than 600 and now you have to file all these reports, and these reports comes with fees and fines, and it's just a whole lot of jogging in between there that you have to stand up for legally and pay these fees, and you make less than 600, it don't make sense. Number two is choosing the wrong business entity. So let's say, for an example, if you file as a LLC and you're a sole member LLC, it's like you filing your taxes almost like a sole proprietorship. You have 100% control of that LLC, and you're filing come tax time, you're filing that LLC along with your personal tax. It goes hand in hand, all in one. It don't make sense. It don't have a lot of back in there in terms of tax returns. But if you file, at least if you have someone else on there with just a 10% or 5% or 2%, whatever, now that gives your LLC an opportunity to be filed tax time as a separate entity, and now you can file your personal taxes separately and file the business separately. So I think having a member LLC over a sole member LLC is much profitable, and it makes a whole lot of sense. As a corporation, if you are filing as a LLC and whereas you need to be in the S corp bracket, and you're just still filing tax time as a LLC, and you have employees on, you have a lot of things going for that LLC, you might be paying tax double. So looking into a S corp taxation bracket will be beneficiary for you. And understand this though, an LLC is a structure, it's a business type. A S corp is just like a tax envelope. Okay, so understand, S corp is not necessarily an entity type. It's a tax bracket kind of envelope that shields you, and it has a lot of things that you can file and protects you tax wise. So either filing an LLC or a corporation, you want to look into that and see what's beneficiary based on your business, especially if you make over a certain amount, the threshold based on what the revenue looks like. So if you make less than 50,000, yeah, having a members LLC might sound good right now. But if you start to make over 50,000, over 100,000, and you're still operating within the LLC bracket, it's much more costly to you, most especially if you start to pay yourself or pay other people. You want to look at a S corp envelope bracket. Number three is not having a separate business bank account. At this point, if you have an LLC or corporation, you want to separate your personal finances from your business. So having a business bank account is crucial. And there are several documents in between that you need to present to your bank that's going to qualify you not to have a business bank account, like your EIN number, your business registration with your state, that is your article of incorporation. You want to have your operating agreement if you're LLC. If you're a corporation, you want to look at your bylaws. That's included with nonprofits. That's bylaws, okay? So you want to have these documents, and then, yes, of course, who are those members? If you have a sole member LLC, that's you. You want to take your ID along. If you have partners, every person listed on there as owner of that business, you want to identify them. So you want to have those documents in place and open a separate bank account just for the business. Number four is knowing annual compliance and tax filings. You do not want to know your annual tax filings, and it varies from state. Some states are biannually, some states are every year, some states are 10 years. So it depends on what state you are. You want to look that up. And if you have any questions about that, I have a complete filing report, kind of criteria in your state and everything that tells you what that is. Just comment the word start, and I'm going to send that to you so that you look up your state and see what your requirements are. Because yes, what's going to happen when you're trying to file for business loans, you're trying to file for grants, grantor's going to look at, okay, if I'm giving this grant out to this business or this entity, are they held liable? Are they responsible enough? Are they trustworthy? Are they in good standing? Is this business legit? And all the things that check cause you legit. One is your annual filing. So are you active or are you inactive? And if you are not on top of your annual filings, what then it shows that you are inactive. Like if you Google some businesses right now, they're in operation, they think they're flying, all that. But when you Google them, it's going to say inactive status. That's why sometimes we're getting refused for business credit. We're getting denied for grants because your status up there, that's why you might be open 10 years ago, 5 years ago, 4 years ago, 2 years ago. You are in an inactive status because you're not up to date with your annual filing report. The state tells who's active and who's not. If they're not seeing no kind of flow and kind of reporting for a while, especially up to 3 years, they shut you down and then they show you inactive on that state report. So that's very important, keeping on top of your annual compliances. And then let's talk about tax reporting. If you're not filing your taxes, what you're doing to yourself, you're harming yourself, because in terms of filing for grants and loans, we want to see, if you say you've been in operation for 4 years now, what have you done? How profitable have you been? Have you been filing your taxes? What's your annual report? What's your, the business tax documentation? They want to see that. So yes, indeed, you might be slacking on these things, but you are slacking a lot, especially if you want to benefit from OPM, that is other people's money, and benefit from loans, grants, and all those things. Your annual report is very important, and it's also very important because you can get fined, you can get sued, you can get inactive status, and that's going to lead to even you having clients don't want to deal with you. Some clients out of a deal with you because we look you up and they see that you are in an inactive status. It shows that this business is not legit, it's inactive, like you are not responsible enough to do business with you. If you have any questions, drop your comment in the comment section, or better still, hit my DM and ask me your question there. I'm your girl Mallory, your finance and business consultant. Follow, hit the like and share button, and let's get your business set up the right way.